Why have some biotech stocks have been true superheroes on the Nasdaq this week, while others have been supervillains? Let's analyze this to learn and apply these lessons in the future. Jump in! We are starting the taxi. Today we're beginning in Sevilla, Spain, with views from the Giralda and its most iconic plaza. If you'd like me to visit your city, let me know in the comments. Welcome to Taxi Biotech, a program dedicated to discovering news and updates in the world of biotechnology and understanding the impact on the stock market. The stock data I present here reflects the trajectory of companies or the clinical trials and does not constitute any investment advice. This is pure entertainment. Let's see what happened this week. The top performing stock were Poseida Therapeutics with a 243% increase, XCUR with a continued rising from last week with another 176% gain, and Cabaletta up 108%. Let's start with Poseida Therapeutics, which experienced an overnight increase and maintained a price of around $9, a classical pattern of a company acquisition. And indeed, this week, Poseida was acquired by Roche. Roche will pay $9 per share. But if Roche is paying $9, why is it trading at a higher price? Okay, it's only 30 cents, but who's overpaying? Well, Roche could make additional payments up to $4 per share if Poseida meets a specific milestone with its molecules. These payments are long-term, going from 2028 to 2034. For example, the first milestone requires initiating a phase 3 trial for Poseida's molecules by 2028, which would result in a $2 payment per share. Going back to the chart, if this milestone is achieved, that's a 20% gain from current levels, and the risk is only 30 cents per share. Personally, I think this offers a decent return if achieved in only 2 years. However, over 4 years, it will only yield around 5% annually. Honestly, we can find 5% return, risk-free options out there. Poseida just released interim results, which seem promising, but clinical trial data shows that the phase 1 trial will take a while, so it seems not very attractive for me. We can see here the data that they estimate. What deserves attention though is why Roche acquired Poseida. Roche had already been collaborating with Poseida for a long time, so they likely saw promising results, had insider knowledge. However, it's noteworthy that they acquired Poseida on the same day that Roche announced negative results for their phase 3 study of an anti-TIGIT drug, which failed in terms of efficacy. Some speculate that Roche just acquired Poseida to divert attention from their phase 3 failure. Now let's move on to Cabaletta Bio. The stock recovered after a sharp drop. Examining their press release, we see at the point marked by the blue line here on the chart, they presented results from one of their trials. Looking at the chart, the trial didn't go as expected. Initially, there were concerns about a severe adverse event affecting one patient. Later, the company clarified that the patient hadn't properly disclosed a pre-existing infection. This explanation seemed to restore the stock's valuation to its level before the results were announced. So why the gap here appear? It seems that Poseida's acquisition triggered the speculation about other companies being potential buyout targets. Who knows, maybe Cabaletta will be acquired too, I don't know. They have a broad pipeline, but lack strong collaborations. Personally, I think betting on such a speculation is liking to play the roulette. Next, we move on to XCUR, We analyzed this stock last week. You can check the video tag above. And it's now up 10x since then. What's fascinating about this stock is that at the green line here marking the graph, we see the news that could have triggered that 10x return. Last week, we note that a company unrelated to biotechnology acquired their shares, as detailed in the press release. I really don't understand why people on Twitter are drawing lines and talking about bullish sentiment here, and other lines here. I think that technical analysis is irrelevant in this case. What matters is evaluating the company replacing XCUR and extrapolating that to the stock performance. Now we are going to move on to this week's supervillains: CASAVA Science, Applied Therapeutics, and Outlook Therapeutics, with losses ranging from 88% to 61%. Look at these charts. This is also biotech. The declines were triggered by negative news. In the cases of CASAVA and Outlook, they failed to meet the primary endpoints in the clinical trials. For Applied, the FDA rejected their drug for galactosemia. Could we have taken some profit from this? Yes, but it's incredibly risky, and in my opinion, not worth in the long run. One way to profit from these declines is by shorting the stocks, betting that they'll drop. SAVA, for instance, has fans and detractors. Detractors expected the trial to fail. However, in biotech, short squeeze occasionally happen when many investors short stock and any positive news emerge. Then the price skyrockets, forcing short to close their position at potentially infinite losses. So the problem is when to short the stock. Here, because then you could have a 300% increase and you have to close the position, even if you know that the trial is going to fail. If you know that a certain drug will fail, it's easier to short on specific datas, such as those set by the FDA for drug approval, for example, like Applied Therapeutics. Applied Therapeutics had a November 28 decision date. At least here you have a clear entry and exit range. But no one's predictions are 100% sure. In my opinion, shorting without protection is too risky. You can hedge by buying options on the company you are shorting. Let me know if you would like a tutorial on this. By the way, where is technical analysis in this chart? If a drug fails, no Bollinger Bands, stochastic oscillators, or Fibonacci retracement will save you. Perhaps that's a topic for another video about why technical analysis doesn't work for biotech companies. And finally, this is our weekly recap. Today's cases teach us to evaluate science over charts, consider competitors' acquisitions, and look for clues about potential future buyouts. We also say goodbye from Sevilla, highlighting our superhero, the amazing work of the Andalusian Center for Molecular Biology, CABIMER. On the other hand, it's a shame about Abengoa. See you in the next video.